For decades, China has been Australia's largest and most influential trading partner. From iron ore and coal to beef, barley, wine, and higher education, Chinese demand has powered Australia's economy in ways few countries ever have. Mining towns boomed, universities filled with international students, and export revenues soared, all thanks to China's insatiable appetite. But today, that once rock-solid relationship is shifting, quietly, strategically, and in some cases, uncomfortably. Trade bans, political tensions, and global supply chain disruptions have forced Australia to reassess its economic dependencies. So what exactly is happening? And more importantly, who's stepping in to fill the gap as China's dominance begins to fade? Is this a temporary pause or a long-term transformation? Because this isn't just about trade deals and shipping routes. It's about geopolitics, national security, global realignment, and Australia's future place in a rapidly changing world. Let's break it down. The rise and strain of the China-Australia relationship. To understand what's changing, we have to understand what was. In 2009, China overtook Japan to become Australia's largest trading partner, a milestone that signaled the beginning of a deep and lucrative economic relationship. By 2020, trade between the two nations had surged to over 250 billion Australian dollars. China was buying more than a third of Australia's total exports, powering entire industries. Mining towns flourished on iron ore shipments. Universities swelled with international students. Property prices climbed, buoyed by Chinese capital and migration. But that relationship came with invisible strings. China needed Australia's raw materials, especially iron ore, to fuel its rapid industrial growth. Australia, in turn, became increasingly dependent on China's demand. The interdependence was comfortable, profitable, predictable, until it wasn't. In 2020, that carefully balanced arrangement collapsed. When Australia publicly called for an independent investigation into the origins of COVID-19, China retaliated hard. Tariffs and unofficial bans hit Australian exports across the board: barley, beef, lobster, wine, coal, and more. Chinese students were warned off. Australian universities. Chinese tourists were told not to come. It wasn't just a trade dispute, it was a wake-up call. The question became impossible to ignore. Could Australia afford to be this dependent on a single country? The answer increasingly was no. A wake-up call. The 2020 trade tensions marked a decisive turning point in Australia's economic strategy. Confronted with the risks of over-reliance on a single trading partner, Australia began actively diversifying its trade relationships. The federal government launched a wave of trade missions targeting Southeast Asia, India, the Middle East, and even emerging markets in Latin America. The message was clear: build economic resilience, reduce strategic dependency, and forge broader, more balanced alliances. This wasn't just a short-term fix, it was a long-term shift in thinking. By spreading its economic ties across multiple regions, Australia aimed to future-proof itself against geopolitical shocks. Fast forward to 2025, and the strategy is beginning to bear fruit. A new wave of trading partners is gradually chipping away at China's once dominant position. 1. India, the new strategic partner. India isn't just the world's most populous country. It's quickly becoming one of Australia's most important economic partners. In 2022, the two nations signed the India-Australia Economic Cooperation and Trade Agreement, ECTA, a landmark deal that slashed tariffs on billions of dollars worth of goods and opened the door to deeper commercial ties. Just a year later, in 2023, Australian exports to India soared to a record high of over 24 billion Australian dollars. The strongest areas of growth were in education, energy, and critical minerals, sectors that align with India's rapidly expanding economy. India has a growing appetite for Australian coal and liquefied natural gas to power its industrial growth. It's also investing heavily in critical minerals like lithium and cobalt, which are essential for its renewable energy and electric vehicle goals. Australian agricultural exports, such as lentils and wool, are also in high demand. And in higher education, Indian students have now become the largest group of international students in Australia, surpassing China in many universities. The broader political relationship matters too. Both countries are members of the Quad Alliance, positioning India as not only a vital trade partner, but a strategic ally in an increasingly divided Indo-Pacific region. 2. Vietnam, the manufacturing alternative. When global companies talk about China plus one, Vietnam is increasingly that one. With its low labor costs, improving transport infrastructure, and politically stable environment, Vietnam has rapidly become a manufacturing powerhouse. And that shift is highly significant for Australia. As businesses look to reduce their dependence on China, Vietnam has emerged as a compelling alternative. For Australia, trade ties with Vietnam have strengthened considerably. Imports from Vietnam have more than doubled in less than a decade, rising from just over $6 billion in 2015 to more than $15 billion by 2024. Vietnam is now one of Australia's top suppliers of electronics, textiles and footwear, furniture, and machinery, sectors previously dominated by Chinese exports. But the trade flow isn't one way. Vietnam is also buying more from Australia, particularly agricultural products such as beef, wheat, and dairy, essential commodities for Vietnam's growing middle class. As geopolitical tensions continue to mount across the Asia-Pacific, Australian businesses are hedging their supply chains, increasingly turning to Vietnam and other ASEAN nations. This diversification not only lowers risk, but reflects a broader shift toward regional resilience and economic independence from China's manufacturing dominance. 3. Indonesia, the sleeping giant awakens. Indonesia doesn't get nearly enough credit in Australia's trade conversation. It's the fourth most populous country in the world, located right next door, and its economy is quietly but steadily growing at around 5% per year. Despite the proximity and scale, the bilateral relationship has often been underdeveloped, until recently. In 2020, the two nations signed the Indonesia-Australia Comprehensive Economic Partnership Agreement, IA-CEPA, a major step forward in deepening trade, investment, and strategic cooperation. Since then, trade volumes have seen a gradual but steady rise, particularly in sectors like agriculture, education, and energy. Indonesia has become a key importer of Australian wheat, driven by its massive noodle industry. It also imports large volumes of beef to meet the demands of its growing urban middle class, along with alumina and coal to support its expanding industrial sector. At the same time, Australian companies are finding growing investment opportunities in Indonesia's infrastructure projects, healthcare systems, and emerging digital services sector. While this partnership is still in its early stages, the potential is enormous. With the right diplomatic focus and economic alignment, a rising Indonesia could evolve into a long-term regional anchor for Australia, both economically and strategically. 4. South Korea and Japan, old friends, new deals. While much of the focus has been on emerging economies, two of Australia's oldest trade partners are also stepping up. South Korea and Japan have both deepened ties with Australia in recent years, especially in energy and critical minerals. Let's start with Japan. Japan remains one of the biggest buyers of Australian LNG, coal, and iron ore. But the relationship is evolving. With Japan pushing a green transition, there's increasing investment in hydrogen projects and rare earth elements, with Australia as the key supplier. Same story with South Korea. South Korean firms are investing heavily in Australia's lithium and battery supply chains, essential for electric vehicles and clean energy storage. In 2021, Australia and South Korea signed a low and zero emissions technology partnership. By 2024, bilateral trade exceeded $40 billion, driven by energy and technology collaboration. These aren't just trade deals, they're long-term industrial alliances. 5. United Kingdom and the EU. Post-Brexit reconnection. After the United Kingdom left the European Union, it urgently needed to forge new trade relationships to fill the gap left by the single market. Australia, with its stable economy and strong historical ties to Britain, was a natural fit. In 2021, the two countries signed a comprehensive free trade agreement, which officially came into force in 2023. The deal eliminated tariffs on over 99% of Australian exports, opening the door for greater access to UK markets. Since then, British demand for Australian wine, beef, and other agricultural products has been steadily rising. On the flip side, Australia is importing more British pharmaceuticals, advanced technology equipment, and professional services. While the volume of trade may not rival Australia's major partners, the UK relationship is a symbolically important one, rekindling old ties in a post-Brexit world. Meanwhile, trade negotiations with the European Union were slower and more complex. finally concluding in late 2024. With growing concerns over reliance on China and Russia, the EU is now looking to Australia as a secure source of critical minerals vital to its green transition. The Australia-EU trade relationship is less about volume and more about long-term strategic alignment. 6. The Middle East. Here's a curveball. The Middle East. Countries like the United Arab Emirates, Saudi Arabia, and Qatar are investing billions in food security, energy diversification, and logistics. Australia, with its vast agricultural sector, is a perfect partner. The UAE has emerged as a key importer of Australian meat and grains. Saudi Arabia has invested in Australian livestock and agribusiness. Qatar Airways is expanding routes and cargo links. But the relationship isn't just exports. Middle Eastern sovereign wealth funds are investing in Australian real estate, logistics, and renewable energy. In a world where geopolitical alliances matter more than ever, the Gulf states offer Australia money, markets, and geopolitical leverage. 7. Latin America, the emerging player. Latin America is still a relatively minor player in Australia's trade story, but that could change in the coming years. Countries like Chile, Brazil, and Mexico are showing increasing interest in deeper collaboration with Australia, particularly in areas like mining, agricultural technology, climate resilience, and renewable energy. Australia is already partnering with Chile on lithium extraction and environmental standards, as both countries aim to become key suppliers in the global green energy transition. Brazil, meanwhile, is exploring Australian expertise in mining safety and automation technology. While these relationships are still in their early stages, they hold significant strategic potential. How much has shifted? Let's put this shift into perspective. In 2019, China accounted for a massive 39% of all Australian exports, a level of dependency that made many in Canberra nervous. By 2024, that figure had dropped to around 28%, reflecting a noticeable effort to diversify trade relationships. China remains Australia's largest trading partner, but the writing is on the wall. The future is not about complete decoupling, but rather a slow, deliberate rebalancing of Australia's global economic portfolio. Why this matters? This isn't just about dollars and trade balances. It's about strategic autonomy. The China shock of 2020 exposed a painful truth. Australia was vulnerable, too dependent, too exposed to the whims of a single partner. Diversifying trade isn't just smart economics, it's geopolitical insurance, and it's happening in a world that's increasingly fractured. The US-China rivalry is reshaping global supply chains. Climate change is redefining energy markets, and nations are turning inward, prioritizing resilience over efficiency. Australia can't afford to stand still. It needs trade partners who won't use economic coercion as a weapon, who respect the rules, who want mutual growth, not political leverage. That's what this new trade era is about. Of course, this transition isn't easy. Some sectors, like iron ore, are still almost entirely dependent on Chinese demand. Building trust with new partners takes time and real diplomacy. Logistics, infrastructure, and language barriers make non-China trade more complicated. And let's be honest, China isn't going away. In fact, in 2024, diplomatic ties began thawing again. Coal and wine exports have partially resumed. High-level talks are back on. But the lesson has been learned. Australia can trade with China, but it can't be dependent on China. That's why the shift toward India, Vietnam, Indonesia, and others is here to stay. Australia is rewriting its economic story, away from dependency toward diversity, away from risk toward resilience, and in a world that's more uncertain than ever, that might be the smartest move it makes this decade. If you found this video informative, don't forget to like, share, and subscribe for more content that unpacks the economics shaping our world. Let us know in the comments, which country do you think will become Australia's biggest partner in the next 10 years? Thanks for watching.